Stop what you're doing, grab a drink, have one with me. I have drinks with clients all the time. I want you to have one with me, and let's talk the auto real estate market. Home sales in Ottawa just dropped 18% compared to this time last year, and what that means for buyers and sellers heading into 2026 might surprise you. Yes, November was slow. Yes, the numbers look dramatic, but the story behind them, that's where things get really interesting, so let's talk about it. Today I'm going to break down the latest facts and figures from the Ottawa Real Estate Board for November 2025. I'm going to show you what these trends actually mean for you as we move into 2026, especially with Canada's economy shifting, interest rate policy evolving, and affordability becoming the defining conversation in real estate. I'm Sernoskie. I'm a real estate agent right here in Ottawa, and if you're thinking about buying or selling or renting in the nation's capital, my contact info is on the screen now. Call or text me anytime at 613-277-6075 or email serno@royallepage.ca. I'd love to help you make your next move confidently. All right, let's jump back in. According to the Ottawa Real Estate Board, the city counted just 880 sales in November, a sharp 18.2% decline from the same month last year. But that number doesn't tell the whole story, because despite fewer homes trading hands, prices didn't fall. In fact, they actually went up. The average price in November rose 2.2% year over year, landing in above $680,000. And this is one of the key trends if you've been watching all year. Sales volume has been cooling, but prices have remained stubbornly resilient. And this tells us something important. Buyers are cautious, but they're not disappearing, while sellers are patient and not panicking. This is what a transition market looks like. Now, this is where things get interesting. New listings jumped 10% year over year, with 1,450 plus fresh properties hitting the market in November. Ottawa's active inventory at the end of the month reached 3,700 plus listings, and that's up a massive 31%. More inventory generally does two things. One, it gives buyers breathing room, and two, it forces sellers to price realistically. And we saw that play out in November. Homes sold for 97.8% of their asking price, meaning buyers have negotiating room, and that's something that was unheard of during the pandemic boom. Let's break it down even further. Single-family homes saw an average sales price of $835,000, and that's up 5% year over year. These remain the strongest segments, and this is driven by families relocating within the city and new construction costs staying high. Condo apartments saw an average price that came in above $452,000, and that's up more than 7%. Condos are surging as affordability pressures push more buyers toward lower price points. And townhomes saw an average price of $542,000. That's down 6.6%, but this is the most notable correction. Townhomes have exploded in value from 2020 to 2023, so this is the segment that we're seeing the most price normalization. Ottawa ended November with 4.2 months of inventory, and here's why that matters. 0 to 3 months equals a seller's market. 4 to 6 months is balance. 6+ months is a buyer's market. So at 4.2 months, Ottawa has very quietly moved into a balanced market. This is the first time in years where neither side has a clear advantage. Buyers can negotiate, sellers can still get strong prices, but they need to price smart. To understand where we're heading, we need to zoom out and look at the broader Canadian economy. The Bank of Canada cut interest rates again on October 29th, dropping the overnight rate by 25 basis points to 2.25%. That was the second consecutive cut, and it signals something important. The bank wants to support economic growth, but not overstimulate housing the way it was in 2020 and 2021. Stronger than expected Q3 GDP numbers prompted the bank to hold steady at their final rate announcement of the year in early December. The Bank of Canada has hinted that rates could stay put for a while. Demand could pick up slightly in early 2026, especially from first-time buyers waiting for rates to stabilize. The real wildcard, Canada's overall economic performance. If unemployment rises or GDP weakens, buyers may hesitate. If inflation stays controlled and rates fall further, demand could surge faster than expected. Ottawa historically performs better than most major Canadian cities during economic uncertainty because of our stable government employment base, but even those jobs have some uncertainty surrounding it currently. So while the national picture matters, Ottawa often follows its own path. November's numbers aren't a sign of a collapsing market. They're a sign of a market that's resetting, balancing, and preparing for a very different 2026 than the frenzy of the past few years. Buyers have opportunities they haven't had in a long time, and sellers can still secure strong prices, but strategy matters. If you want a personalized breakdown of what this market means for your home or your next move, reach out anytime. Thanks for watching, stay tuned for more updates, and I'll talk to you in the next video.